Lee
Yes.
Harris over at Limestone. Jeffrey bought a home 2 years ago, and he's paying PMI. That's private mortgage insurance. He's wondering, how does he get rid of PMI payment, and what are the steps involved in determining if it can be removed? And Josh may want to jump in on this one as well. Lee, you want to start it?
Josh, correct me if I'm wrong, but I think you've got to get your mortgage balance down to 80%. Once you have 20% equity, you can either it goes through the number of years that you have it, or you can prove to the PMI powers that be that you have the equity there and you can get it removed. Is that correct?
Yes, that is correct. It also depends on the loan type. There are some loans that the mortgage insurance does not come off of. FHA, unless you put 10% down in the beginning, the mortgage insurance is on there throughout the life of the loan.
No.
Now, typically on a conventional loan, once you hit that 79% mark, it will come off automatically. But if you want it to come off when you hit that 80% mark, you have to reach out and prove that you've paid that loan to value down to that 80% mark. Otherwise, it goes down another percent and then it'll come off automatically.
Josh, does equity count? So if your home is appreciated in value by 20% over a period of a year or two, will that help you eliminate PMI?
That is a good question. I think if you were going to try to do that, you would have to pay for an appraisal and send that over to the servicer of your mortgage.
Okay, we have a question on servicing coming up in a little bit, so hang on with that one, just so you know. You know, we have a free no obligation booklet if you're thinking about selling your home now or in the near future. If you'd like a copy of it, simply send me an email, bob@wesellouisville.com, and put selling tips in the subject line, and we will send out the booklet to you via email free of charge and no obligation. bob@wesellouisville.com and selling tips.